Mixed signals on the India-US trade deal. Cloud sentiment as do cues from corporate earnings, keeping stocks in check. Realty and healthcare the big drags, while metals, financials and IT eke out some gains.
In a sudden move, Bajaj Finance Anup Saha, MD, resigns with immediate effect. Vice Chairman Rajiv Jain will step in as MD till his term ends in March 2028. The move setbacks the company's succession plan.
Titan inks a deal to pick up 67% stake in Damas, which has a presence in jewellery across the GCC at a valuation of a tad over rupees 2,400 crores. The deal offers Titan an option to buy the remaining 33% stake in the future.
Zomato and Blinkit owner Eternal stock surges on its bottoming out call for quick commerce and its scripting a path to growth and profitability. Peers Swiggy and stakeholder InfoEdge also rally.
SEBI gives Jane Street the nod to resume trading in Indian equities after the latter gives an undertaking to not manipulate the market. Stock exchanges have been advised to closely monitor its activities.
Hello, good afternoon and welcome to Halftime Report coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. With me is Mangalam Malu as well as Ekta Batra. Good afternoon, guys. An interesting day coming in. After opening in the green, yesterday we had seen that green as well. Today seems like a bit of a consolidation. There are a lot of individual movers in terms of earnings that we're seeing coming in. I think Mangalam is going to order food for us now, given everything on his sector is buzzing today. So whether Eternal, Swiggy, Titan, all of them holding on to gains. So Mangalam, where's the treat now?
Well, I will talk about food in just a bit. But, as we speak, I guess, the person who's breaking that story may perhaps get a little more than food for us. Beverages, we have Tilaknagar, which is on our radar. We'll quickly get Nigel in. Tilaknagar Industries likely to go ahead and make a purchase of one of the whiskey brands of the country, Imperial Brew. And that's the story. We'll just shortly get Nigel, and Nigel will tell us a little more about that as well. Nigel, you are picking up from your sources that Tilaknagar Industries is likely to go ahead and grab a big sip of the whiskey market. Nigel.
Well, that's right. Mangalam, it looks like Tilaknagar Industries is looking for a stiff peg, and that too a whiskey.
Yep.
We understand from sources there could potentially be a deal where Tilaknagar goes ahead and buys Imperial Blue, which is the whiskey brand which is owned by Pernod Ricard, and they've been searching for a buyer for the last few months or so. Now, what could the valuation be? It could be roughly in that vicinity, very roughly in the vicinity of around 4,000 crores odd. How will they fund it? Well, we understand it could be a mix of equity as well as debt. And as they've already disclosed on the exchanges, that tomorrow they're going to be meeting to consider various options. So we'll have to see what is the mix of this 4,000 crores between debt as well as equity. That'll be important. We know that Tilaknagar Industries over the last few years, from being a net debt company, actually they've become a net cash company. They have close to around 100 crores in their books. We reached out to both the management, Pernod as well as Tilaknagar Industries. We're awaiting comments. As they comment, we'll add it, to the highlights. But just a few factors out here. The key number is going to be what valuations is this done and how much of that will be debt. For Tilaknagar Industries, the reason the stock is buzzing because the street views it positively. As of now, they're only a brandy player. So they'll become a whiskey player as well. So diversification. Currently, they're south-based, more than 80% in the south. They'll become a pan-India player as well. And I was looking at rough numbers. Last year, Tilaknagar Industries sold around 12 million cases. Imperial Blue sells around 22 million cases. So capacity, the scale itself will go up drastically. Yet we'll have to wait by to see what is the valuation, what is the debt. But we understand probably there could be a big deal in the works with Tilaknagar Industries looking for a stiff peg, and that too of whiskey this time around.
Okay, all right, Nigel, thanks very much for that. So big deal, and the whiskey market itself, the Indian whiskey market is poised to grow to around $46 billion by 2030. So it's the right sip that they're taking.
I'll tell you one thing. Browns in India, which includes the likes of whiskey and brandy, are nearly 95% of the overall market. So all the conversation that happens around strong growth in tequila, strong growth in vodka, strong growth in gin, strong growth in wine is just 5% of the market. No matter what, Indians are whiskey drinkers, and a large part of South India is brandy drinkers. So there could be a geographical expansion for Tilaknagar Industries out there as well. What is the kind of debt that they take will be extremely crucial to track. But in the past, Tilaknagar has said that, their brandy sales, which is about 91% of the business, they plan to take it lower to about 80% organically. And if this deal happens, then that increases a lot more.
I think Vinny, you want to come in on that with regard to
No,
the
I'm
browns
happy
or
with
the
this.
whites?
If it is coming here, brown and white, I'm okay with any of them. So I'm up for it.
We'll wait by for this deal, but it's been in the works for very,
Yes.
very long, and let's see whether or not it does take place. But as of now, sources do indicate that there could probably be a deal, and that could be in the next couple of
But
weeks.
India's
itself.
alcohol market as a whole is, just on an upward
Yes,
trajectory.
yes,
You're
yes.
talking about whiskey with the third largest consumers when it comes to alcohol. And when it comes to whiskey, I think 17% CAGR is what we're growing at.
Yeah,
so
no.
that's the kind of growth
And look at that, Ekta on top of the numbers. Not just dawa, but daru also.
What we'll do is we'll, just a last part of
Daru leads to
the
dawa.
last part of the street. I'll be very interested to know how much of that was factored in by them as well. Because if you look at the last 1 month chart of Tilaknagar Industries as well, on a regular basis, we've seen the stock move higher. And over the last 2 trading sessions or 3 trading sessions, there was that additional benefit that had come in from, the La Maison thing as well. So we'll watch out for that. The Bombay High Court has put a stay on that. So we'll watch out for how the story develops from here on. For now, a 25% up move is what we've seen on Tilaknagar Industries. Thank you so much, Nigel, for bringing that to us. Vinny.
Absolutely. That's going to be interesting now in terms of the alcobev industry as well. But, let's shift focus and talk about the IT sector. Now, we had Latent View Analytics, which reported their numbers yesterday. Inline set of numbers that came in, obviously, versus what we're seeing with the estimates. But strong growth in Decision Point. Commentary seems exciting coming in from the con call as well. Now, today we're joined by the management of the company. We have Rajan Sethuraman, who's the Chief Executive Officer at Latent View Analytics, joining in with us. Good afternoon, sir. And thank you so much for joining in with us on the show. Let's just start by talking about in terms of overall the growth outlook. I want to understand because overall the core business, that's the latent views business, that's seen a muted growth of 0.3%. I'm comparing this on a quarter-on-quarter basis, while Decision Point has seen a much stronger growth, obviously, 16% growth. I want to understand where will this growth go for Decision Point as well as the core business of the company? How is that going to be in FY26? And will Decision Point continue to grow at a faster pace right now?
Good afternoon. You are right. I mean, the core business on a rupee basis was a smaller percentage, but that has also been impacted by the stronger rupee vis-a-vis the dollar. In dollar terms, we did about close to 3%, 2.9% or so. So, yeah, it's a tad lower than what we were imagining it to be at the start of the year. There were a couple of deals which were one-off projects that closed down, and some of the other larger deals have taken some time to fructify. But those deals have come through now, and we see that the second quarter we will not only catch up with what we lost out in the first quarter, but it will be better as well, right, in terms of the overall growth trajectory. Decision Point, if you remember, it has been impacted by the general sluggishness in the consumer goods sector last quarter. Last quarter, they were almost flat. But again, we see optimism and green shoots. We were able to close a few new wins in Europe as well as in the US. And we also see traction with the existing accounts that we are working with. More conversations happening with the CIO, CTO audience, slightly more integrated approaches also to transforming, not cutting across R&D, supply chain, and RGM. So we are expecting that the remainder of the year will continue to be a positive momentum for the consumer goods sector as well.
Okay. All right. So, for FY26, you've been quite positive in terms of your guidance, USD 18 to 19%, shooting towards 25% growth eventually. Where do you stand considering this quarter's performance?
So as I said, while this quarter, the core business was a tad lower, we are already seeing a revival in the second quarter. I mean, some of the deals which we were expecting to close prior to the start of this quarter or early in the quarter, they have been a bit delayed. But we see a much stronger comeback in quarter two. I mean, our quarter two projections internally, what we have at this time, based on the numbers that we see, are quite high. And it is in line not only with the 18-19% guidance that we had given earlier, but if things continue in this trajectory, we should be able to go past the 20 number. Now, I don't want to put out a number at this time because we do want to make sure that things come through in this quarter. But overall, in terms of the guidance that we gave earlier, absolutely no concern. And hitting the 18-19%, we should really go past the 20, right, based on what we see.
Okay, so just to reiterate, 18 to 19% is what you're sticking by for FY26. You think that there's a chance that you could probably go to 20%?
Yeah, go past the 20% number based on what we see. Yeah.
So, you did allude to the deal. The deal and the delay, I suppose, is on account of the acquisition of Decision Point Analytics. That was delayed. Has that come through? The street is worried that if that does not come through, then what? Can you give us a sense on that?
Sorry, I didn't get your question. Are you talking about the acquisition of Decision Point Analytics? Or?
That is correct.
No, I mean, the acquisition has been completed last year, right? I mean, we got 70% then, and we acquired a further 10% at the end of the first year. There is an earn-out plan in place, and therefore we'll be looking at this year as well, right, in terms of completing the transaction and getting 100% ownership of the company. But otherwise, we are already working well together, right, and starting to get the synergy benefits as well of having not only the people from Decision Point, but also the capabilities and the solutions that they have brought to the table.
And what about the margins? You spoke about the synergy benefits and you completing the deal, integrating everything. Just wanted to understand on a combined basis, what proportion of synergies have you realized already? What's your margin target for this year and next?
So the synergy benefits from a go-to-market perspective, they are falling in place. I mean, I would say that we are about 80% there. On the corporate functions, we believe that there is more that could potentially be done. That should give us a kicker on the margin front as well. Overall, as a combined business between Decision Point and Latent Analytics for the year, we are still fairly in range for a 23% kind of a margin number.
Okay. Also, could you talk to us about your different segments, right? Like you said last time also, you had mentioned that consumer side, the consumer sector was not doing well, and that's why some bit of a delay. Now we're highlighting green shoots. So how much of a recovery could we expect in terms over there? Also, BFSI sector, that is, contribution is quite considerably good now, 12% that is coming in from BFSI. You wanted to grow at 40% as well. That's what you mentioned in your con call. So I want to understand what will drive the growth in BFSI? Which part? Is it going to be fintech, payments, AMCs? Where are you seeing good traction?
All right, yeah. So firstly, on the consumer goods, as I said, we are seeing traction in terms of taking a more integrated approach across R&D, RGM, and supply chain. And those are the type of conversations that we are enabling. There is good traction on the generative AI front as well. I mean, one of the deals that we won in this quarter was completely on the back of using generative AI capabilities for creating content, not just the text content, but also the audiovisual content that goes into the direct-to-consumer platform, right, of an innerwear apparel company that we are working with. And this is also gaining a lot more traction with Databricks, who's our partner. So we are expecting that we'll be able to take a more integrated, holistic offering into the consumer goods business. When it comes to BFSI, we have seen an uptick in the payments, in the fintech space, rather than in the banking and the insurance. There are a couple of accounts that we have started working with in the banking and insurance space, but we will probably need another 6 months to see a bigger uptick, right, in terms of the size of the deals that we are doing. So early starts there. A lot of the growth that is happening today being driven on the fintech side.
Okay. Also, just one more point. US, 89% of your revenue is obviously from US. You have spoken about, increasing Europe in terms of the size, but still, it's not that much of a proportion that comes in from Europe. So what are the plans for expanding further in Europe? Any strategies that you have? Any acquisitions over there as well?
So Europe has been a bit of a challenge for us. I mean, we have tried a few things. More recently, when I say recently, in the last 6 months, we did take a call that we will just focus on 2 sectors, consumer goods and banking financial services. The green shoots that we are seeing in consumer goods, as well as the growth anticipated in the banking financial sector, there are accounts that we are working with in Europe as well. So therefore, Europe should be a part of the growth story. We had an earlier target of 10% plus in a 2-year time frame. I would want to wait a couple more quarters to see whether we are able to get to that kind of a number in terms of a projection 2 years out. But Europe is looking good. There is also traction in the Latin American market, right, that we are witnessing. One important lever of growth in both these markets would be to partner with consulting firms who do management consulting and strategy consulting work. There are a few conversations that are underway, and I'll be able to share an update maybe after this quarter's results. But the intent is partner with boutique consulting firms who are doing the upfront business strategy consulting, and can we come in as the data analytics partner, right, to grow these markets?
Okay, all right. So we're going to leave it on that note. Always a pleasure. Thanks very much for joining in and speaking with us. So that is Latent View. The stock is up around 4% at this point in time. They are confident in terms of the guidance of around 18 to 19% growth for FY26, possibly even shooting above 20%, and margins of around 23%. We'll take a short break, but before that, now it's time to recognize the champions. Get ready for an evening that honors India's most promising SMEs, the champions behind our nation's remarkable progress. From groundbreaking innovation to grassroots impact, these businesses have powered growth, inspired change, and redefined ambition. HSBC presents CNBC-TV18 SME Champion Award Season 2. India's most coveted SME award platform is all set to finally announce the winners on 25th July, 3 p.m. onwards. Welcome back. Well, for the markets, it's quite quiet today in terms of movement, except for the mid-cap index, which is under pressure and underperforming. So down around 0.4% currently for the mid-cap index, with the advanced decline ratio on the declining side. So that's really where the pressure is, the broader markets at this point in time. But Bajaj Finance is in focus as its MD and CEO Anup Kumar Saha has tendered his resignation, and Rajiv Jain has been re-designated as the VC and MD. Now, several reports have emerged thereafter on Saha's potential next stint. Ritu joins in with more details on this story. Ritu.
Well, our sources indicate it may be too early to assume that Anup Saha resigned from his position as the MD of Bajaj Finance to take over the top job at IndusInd Bank. Remember, we were the first to report that Anup Saha is among the 3 candidates who are in the running for the IndusInd Bank CEO role. And while his name being in the mix may have had some bearing on internal dynamics at Bajaj Finance, we understand RBI is yet to clear a name for the IndusInd role. So the idea that he quit specifically to join IndusInd may be a bit premature. But that said, the resignation itself has come as a surprise, given he was being groomed for the position for the last couple of years and only took over as the MD in April, and so him quitting the role in just under 4 months has raised some questions. Equally important is the fact that Bajaj Finance's long-term MD, Rajiv Jain, is back at the helm, and he's going to serve as the MD for the remainder of his term until March of 2028. Now, while this will provide a smooth transition for Bajaj, the focus will also move to succession planning. Now, remember, Rajiv Jain has spent more than 15 years as the MD of the company, and while RBI rules limit bank CEO terms to 15 years, there is no such cap for NBFC, so technically he can continue, but the company will still be under pressure to groom the next line of leadership. Now, Jeffries points out that Rajiv Jain may now need to pull back from any advisory role at Bajaj Finserv, and Morgan Stanley calls this a setback to the succession plan that the company had been executing. But with Rajiv Jain back in the driver's seat, they say the situation remains manageable.
Okay, Ritu, thank you so much for that. But let's move on and talk about Zomato and Blinkit's owner, Eternal, that has surged in trade. And this is on it saying that maybe we'll see that bottoming out coming in for its quick commerce side of the business. And now it's scripting a path of growth and profitability. Mangalam is joining you with us now to tell us what is fueling this surge. What are we expecting going forward as well? Mangalam.
Well, Eternal in today's trading session have hit a record high. In fact, ever since the company reported the numbers, the stock has rallied about 15% plus. And that, if you look at the reported numbers, then you'll be wondering why. Because the revenue has grown 70%. That's great. The EBITDA has fallen 35%. Margins have contracted to 60 basis points. And the net profit has fallen 90%. Now, here's why. Because a couple of things that the management spoke about are telling you that the worst is behind. One, year-on-year growth has bottomed out for the food delivery business, which implies that it will only improve from here on. And near-term, quick commerce margins too have bottomed out, and they will improve from here. So let's take the food delivery business first. Over the last many quarters, the revenue growth had been coming down, and for the first time between Q4 and Q1, the revenue growth has stabilized. This is gross order value growth has stabilized at around 16%, which the management believes is the absolute bottom. And from here on, they are expecting growth to resume. That's a positive. The second part, Blinkit, which was supposed to be the growth driver of the company, continues to be the growth driver, so much so that the revenue growth of 154% has actually made it the largest revenue component in the overall business. But the problem over the last few quarters was EBITDA loss increasing due to competition. Out here, the losses have narrowed quarter on quarter, and this despite the company continuing to expand. So if you look at it, they've added almost 243 stores in this quarter, total stores going all the way up to 1544. And this, while doing so, the losses quarter on quarter have narrowed. So the Blinkit loss trend comes up for you from 178 crores, it's narrowed to 162 crores. And the management believes that in the near term, it's actually likely to see margin improvement. So two growth drivers of the company, both of them fairly in place. Which is the third one? It is District, where the management sees over the next 5 years, it could be an annual $3 billion revenue company with $150 million in annual adjusted EBITDA. So the third factor doing extremely well for them as well. The question, what about the money? Well, in the fourth quarter, they had seen a quarter-on-quarter decline in their cash balance. That too seems to be stemming right now. From the fourth quarter to now, the cash has marginally increased or cash burn has reduced as well. So all these factors doing well. The stock, which was off its highs, has now moved higher. The next big trigger is because it is now a largely domestic-owned company. They will own inventory in Blinkit as against third-party sales, and that could increase their margins in the quick commerce business by about 1% as well. And when Blinkit rise, it's not just Blinkit, because we have Swiggy, which is trading higher on the back of Eternal's performance, and it trades at a 45% discount to Eternal, so that stock is higher. And secondly, InfoEdge, which owns about 13% stake in Eternal, worth nearly 38,000 crores or 40% of its market cap, doing well in today's trading session as well. But the data point or the picture that caught my eye was that on the shareholders' letter. It had three businesses, all of them with clear positioning. Zomato for Eternal, aaj kya khaoge? District, aaj kahan jaoge? Is the going out business. And Blinkit, finally, aaj kya mangwaoge? Three business propositions, all of them clarified in their shareholders' letter.
Okay, Mangalam, and the last three indicating that you just have to spend on all three of them. So that's where consumerism is heading. But nonetheless, that point is taken, Mangalam. Thanks very much for that. That's on Eternal. In fact, multiple brokerages have been positive on Eternal post the numbers. For example, Jefferies has upgraded the stock to buy and raised the target price to 400 odd rupees. CLSA has a high conviction outperform as well with the target price of 385 odd rupees. So all round seems to be a good going for Eternal. We'll take a short break, but Sachidanand Uttikar from Trade Bulls will join in with some of his trading calls. Stay tuned.
Welcome back. You're watching us here on Halftime Report. The markets come off the highs, considerably off the highs in today's trading session, consolidating lower after having seen a bit of an up move in yesterday's trading session. Though now, after consolidation, it's back just above that green line, and that's led by the Nifty Bank. So if you look at the frontline indices, the Nifty Bank, as well as the mid-cap index, that tells you the story of the day. The Nifty Bank is just about meandering around the 20-day moving average, which is 56,973. Yesterday closed above that. Today, for most part, has been below that, but now just about 40 points away from that 56,973 mark. Where it closes will be extremely crucial, because where the Nifty Bank closes will reflect whether the Nifty goes ahead and conquers the 20-day moving average of around 25,300 as well. But before that, we have today's high to contend with, which is closer to 25,182. And 25,100 call writers for a premium of 70 rupees believe that may still, pose some sort of congestion or resistance today. We've seen writing at the 25,100 call and the 25,200 call, which has a premium of 35 rupees, telling you between 25,180 to 25,230, there could be some supply. But at lower levels, 25,000, important psychological level, and also a lot of put writing at 2550, telling you that there is support around 25,000. A lot of long positions added in new age companies. So we just spoke about Eternal hitting a fresh record high. The stock up 11% right now. InfoEdge itself up around 3.5% on the back of its holding there. Long positions being added there. And Paytm, remember the company in its update guided for good performance, and it reports its numbers today. The stock is fairly well bid ahead of those numbers, up around 3% right now.
Okay, all right, Mangalam, thanks for that. So that's Paytm, that stock is up around 3%. We have a lot of numbers to reckon with today. We have Colgate, M&M Finance, Paytm, like you mentioned, Credit Access Grameen, United Breweries, Z Entertainment. So there's going to be a lot of focus in terms of what's taking place in the broader markets. But Sachidanand Otekar from Trade Bulls joins in now to discuss what he's tracking this afternoon on the technicals. Sachidanand, welcome to the show. If you could just start by telling us what your Nifty strategy would be considering the consolidation that we're seeing.
Good afternoon, Ekta. Good afternoon, Mangalam. I think it's been a good start for the week. The Nifty has defended its 50-day exponential moving average support at 24,950 very well. We saw some slippages yesterday, but the recovery has been very significant on the daily scale. We have a strong bullish reversal formation. The confirmation of the same would be set once we see the Nifty, scaling towards 25,180, 250 kind of a level. So as of now, I think the range is well defined. It is oscillating between two key moving averages. One is the 50 DEMA, which is at 24,950. And on the higher side, it needs to surpass that 20-day exponential moving average, which is placed at 25,180. But if you look at the placement of its indicators, especially on the relative strength side, there's a possibility that we may see the Nifty scaling towards 25,250 during this particular week. So hence, we are of the opinion that one should maintain a long bias in the market, though the range is looking like an oscillating range, but within this particular range, the opportunity is purely on the buy side. We are expecting that 25,000 support should hold on at least for the day. Hence, we are recommending building fresh long positions, keeping a stop loss at 25,010 on a closing basis. Eventually, we may see this Nifty scaling towards 25,250, and we may see it surging towards 25,300 for this particular expiry. When we look at Nifty Bank, the range is a bit broader. 56,400 has been a very steady support. But on the higher side, it needs a confident closing above 57,400 mark. If you look at the overall sequence for the last 3 weeks, it looks like a bullish flag formation awaiting a breakout confirmation. So even here, I think one can keep a stop loss at 56,720 on closing basis and look for building long positions. When we look at stocks, I think we have already seen a very confident breakout from ICICI Bank. After 9 weeks of consolidation, this particular breakout has pushed the stock above that 1460 hurdle. So even here, I think there is a good potential that we may see this particular rally getting extended towards 1540. It has been a significant contributor in the last few trading sessions, and that's why we believe that any declines in this particular counter would again give a good opportunity to create fresh long positions. One can keep a stop loss at 1462 on the lower side on a closing basis. From a trading perspective, we may see a swing towards 1510, but eventually we see this rally getting extended towards 1540. So there will be a buy call on ICICI Bank. And the second stock which has hit our radar is Tata Chemicals. Now, if you look at the overall performance, even here, the stock was struggling to surpass its 200-day exponential moving average resistance, which is placed somewhere close to around 950 kind of a zone. Even if you look at its weekly price action, it had been trending lower below its 50-week exponential moving average, which is somewhere close to around 955. So today we have seen a significant price development. We may see this particular rally getting extended towards 1,000 levels. Hence, we are recommending building fresh long positions in a stock like Tata Chemical, keeping a stop loss at 945 on closing basis.
Okay, thank you so much for that. Thank you so much for giving us those views on individual stocks as well as in terms of the market. Just a stock that I want to mark once before we slip into a break is going to be NLC India. That's seen a sudden spike up as well. It's up 5% as of now. We're not seeing much of a news flow here, but as of now, we're seeing a bit of a spike up coming in the last 30 minutes since we started the show. So keep an eye out on NLC India. But on that note, like I said, we're going to slip into a very short break. But here's a reminder for our viewers: unlock a world of exclusivity, expertise and influence. Become a member of CNBC-TV18 Access, our premium members-only experience on CNBC-TV18.com. The membership includes access to CNBC-TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits.
Welcome back, and joining us on the show now is Surendra Mehta. He's Secretary at the India Bullion and Jewellers Association. Mr. Mehta, hi, thank you so much for joining in. First of all, your reaction as well onto the BIS notification, and the markets still seem to be breaking that down in sense of analysis and impact. My first question to you is on the coins itself, which is stated that only mints and refineries can make it. Is there a change really on that line, and the way the jewelers are perceiving it really?
Well, there is a lot of confusion in the market, and let me, through your medium, let me clarify you and clarify the entire industry that in principle, there is no change in the recent notification or the recent order issued by BIS. What basically it says that coin can be now made by mints and refiners, and if coin are made by mints and refiners, then they are not required to be hallmarked. But if coins are made by jewelers, they are required to be hallmarked. Now, what jewelers normally do, they don't have a facility to make 999 coin. They can always make 995 coin, which is called 24 KS and KF as per BIS standard. But anyways, all 995 purity coins, if made by jewelers, they are required to be hallmarked. There is only this one amendment. There is no other amendment at all in respect of manufacturers of coin. So if the jewelers feel that they cannot make coin, it is not true. They can always make coins. They will have to get this coin hallmarked from the hallmarking agents.
All right, that makes a lot of sense, and that does clarify a lot of things as well. My next question to you is about the Indian demand for 9 carat. I mean, in my earlier conversations to you, you always told me that 9 carat is something that the rural India tends to use a lot, not so much for urban India, but with the way the prices have almost doubled in last 2 and 3 years, do you see urban younger crowd as well going on for this 9 carat, not for investment, but only as fashion jewelry per se?
See, initially when the 14 carat started, the similar talks were there that who is going to buy 14 carats, but then diamond industry opted for 14 carat jewelry because they have been now using along with the diamond only 14 carat gold. 9 carat basically, Manisha, is an option given to a jeweler and customer both. If there is really a market for 9 carat, then that option is available to the consumer as well as to jeweler. Earlier, what used to happen, BIS was not permitting jewelers to manufacture anything below 14 carat. Now, this is an option open. We are not sure whether there would be really a market for 9 carat or not. If the market evolves, then jewelers will manufacture. If the market does not evolve, or the market does not pick up for 9 carat jewelry, probably they will not manufacture. But at least by virtue of this, we are giving option to the consumer because of surging prices. In my opinion, I'm particularly of the opinion that a lot of jewelers have been, misguiding consumers in the rural area and were selling jewelry below 14 carat, non-hallmark, and all those complaints we have been receiving. So that is why through an IPJA, we represented BIS and said that, look, you cannot fix it at 14 carat. You will have to bring it down to 9 carat. And that would probably help consumers as well as jewelers both.
Oh, well, yes. Give them an option, and whether they buy or not is purely to the consumers there. But we do understand that it is almost to the tune of 80% of buying that happens in India, or more perhaps, is 22 carats. And then, of course, it's a lot of spread around there. Since we have you with us, what's your sense also on the prices in case of gold? Because we seem to be solidly holding around that $3,300 per ounce mark, with more banks now suggesting that we are going back to 35, 3,600 as well. It only has been about Citibank which believes that we could go down to 3,000, even lower by the time this year ends. And Citi is the only one really, because everybody else, all other Indian banks, brokerages, analysts, everybody seems to be talking about levels much higher.
Well, Manisha, in my last interview to you, I had specifically mentioned that the gold prices will move and will consolidate in the range of $3,200 to $3,450. And that is what we have been seeing this. But let me tell you, yesterday's movement clearly shows that there is more upward side. And I think this upward side, there is another technical pattern forming, which can probably take gold to 3,800 level also. We'll have to understand 2-3 important things, that Fed is likely to cut interest rate and geopolitical tension still exists, tariffs still exist, and the interest rate can be reduced by Fed any point of time. Apart from these, the central bank buying by countries like China has been continuous. And I personally feel that we are moving towards 3,000.
Prices are higher. I have one final question for you, and this is about bullion hallmarking. I remember in the previous conversation that we spoke about this. So as you said, coin hallmarking, if it is done by mints and refineries, is not required. But bullion hallmarking, because IBJA has been pushing on that one as well. What is the latest there?
There is a steering committee formed for the bullion hallmarking. The steering committee has already submitted its report to the Bureau of Indian Standard. We strongly feel that consumers should not be cheated, and we are insisting because if you bring jewelry under hallmarking, which may be even more than 2 gram, it is required to be hallmarked. Then why not bullion? Because at least to start with the mandatory hallmarking, we are pushing towards hallmarking of bullion above 100 grams, and then slowly and gradually it can be brought down to 5 grams.
Okay, all right. Thanks very much, Manisha, for taking us through that conversation. Well, for the markets, it's quite quiet as we speak, but the Nifty is in fact turned into the green. So just watch out for that. But really, just about very tight range that we're trading in today. 25,099, so just about at that level of around 25,100 for the Nifty. For the Bank Nifty, also flat with a little bit of a negative bias. We'll take a break, but remember to tune in to the all-new CNBC TV18 Prime, bringing you insights from policymakers, business leaders and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune in to CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and the Global Lens at 8:30 p.m.
Welcome back to Halftime Report on CNBC TV18. A couple of names from the Nifty 50 that are buzzing in trade. One is Eternal, then the other one is Titan, HDFC Life among the top gainers. But let's talk about Titan, because this has come in, and this gain is coming in after they've acquired 67% stake in Gulf retailer Damas Jewelers for approximately 2,400 crores. Mangalam, give us more details on this one. What does it mean for Titan? Because the stock surely is holding on to decent gains.
Yep. You know, in the morning, during the top 10 segment, we did expect the stock to do well in today's trading session on the back of this deal. So let's just tell you about the deal. It's acquired 67% or nearly 2/3 of Damas Jewelry at an enterprise value of 2,400 crore rupees. So obviously, the net consideration for Titan would be a lot lower than that. You know, the deal will expand the company's presence in the Gulf as well as West Asia, which is Middle East as we know it. Why is this important? Because one, Titan has been looking to expand its international presence. Secondly, there is a fair amount of Indian diaspora in those countries as well. What the street likes about it is the valuation. It's relatively reasonably valued because the business did about 2,700 crore revenue in FY22, moved all the way up to 3,400 crore in FY24. And my sense is that it would have done a lot better given the gold price rise in FY25 as well. So, in all practical purposes, less than about 0.6, 0.7 times sales. Important part is the margins. Secondly, the company has said that, they are looking in the past at nearly $500 million revenue coming in from international business by FY27. As of end of FY25, they were at a run rate of close to $150 million. So this itself, accelerates their target to move to $500 million. In the previous acquisitions, what had happened was they had to eventually, for the remainder, pay a lot more than what they had earlier factored in. But now it turns out that the companies clubbed that or, closed that loop as well by signing a path to acquire the balance 33% stake after December 2029. So the good part is it's a good acquisition in a geography which has a lot of diaspora presence and growth in a place where the company is looking to grow already at fair valuations. Add to all of this, not only does it, cement its position outside of India, but also helps stem any sort of competition coming in from players like Malabar and Kalyan, who already have a serious presence in the West Asian markets as well. So all these doing well for Titan. Stock up around 1.5%.
Okay, all right. Thanks very much for that, Mangalam. That's on Titan. Just watch out for Blue Jet Healthcare because it came out with its numbers just a couple of minutes ago, and it's a sharp downtake that you've seen for Blue Jet post its numbers. That stock is down around 9% reacting to it. So it's been a sharp downtake that you've seen. The revenue doesn't look too bad, but it is the profit which is coming at around 9.1 crores or 91 crores rather, versus around 110 crores in the previous quarter. So there's been a downtick which has taken place on a sequential basis in terms of profit, though the profit is looking okay on a year-on-year basis. So sequentially, there's a downtick which has taken place in terms of the numbers. In any case, we'll take a short break, but as we do that, here is some good news for our viewers. India's business news leader is now just a click away, introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or just scan the QR code on your screen.
Welcome back to Halftime Report on CNBC TV18. As of now, the Nifty is not doing anything. 25,100 levels, above that mark is what we're seeing the Nifty move. So it moved from the red to the green in this last 1 hour since we started the show. But yes, muted day of trade still continues for the Nifty. But let's talk about United Breweries, Mangalam. That is expected to report its Q1 numbers as well. What are we expecting this time? Anything exciting?
Well, we started the show with whiskey, so it's only fair that we ended with beer as well. And, seasonally, United Breweries sees good performance in the first quarter because it's summer season, notwithstanding the impact that we saw of unseasonal rains on a lot of the consumer durables summer products. There are a lot of tailwinds that may still lead to United Breweries doing well in, the first quarter this time around. And that's reflected in the kind of stock price move that we've seen in today's session so far itself. It's a good quarter that is expected. Why is that? Ex of excise, the revenue is likely to grow at around 11%. 2,750 crores is what we're expecting on the top line. The EBITDA grows a step higher, 13% growth, which implies margins of 11.7% versus 11.5%. And the net profit also grows at mid-teens. We're looking at a number of 200 crores. Volume growth expected to be between 6 to 8%. But remember, the volumes would be driven by prestige. For them, premium volumes are likely to grow between 20 to 25%. That's something that's been driving the volumes going forward. Summer is seasonally strong for beer, but there has been a slight impact of unseasonal rains. There is normalized operations in Telangana that would support volumes. Increased prices out there would support EBITDA as well. But impact of excise hike in Karnataka, could that offset the increase that we'd see in Telangana on their operational performance or not, is something we'll be watching out for. And finally, what the company does in terms of investments in brand, demand creation and new bottles as it moves into the premium end of things, that may limit margin expansion, which is why we are expecting 11.7% as against 11.5%.
Okay, that's about United Breweries, but it's time for a special segment as well, Quarter Se Quarter Tak, where we bring you earning expectations from each sector. And today, Ekta is going to be talking to us about pharma and healthcare. What are we expecting to see in Q1 FY26? Ekta, over to you.
Well, for pharmaceutical stocks as well as healthcare stocks, expect a steady quarter. Now, for pharma companies, you are expecting around a 10 to 11% growth in revenue and a growth in EBITDA, which would be similar this quarter, along with profit between 5 to 10%. Now, expect the US growth for generic companies estimated at around 3 to 4% Q-on-Q. Growth X of Revlimid generic would be something to watch out for. Now, overall growth in the US would be led by stability in US generic pricing, volume growth in existing products, and a pickup in recent launches. Expect lower Q-on-Q sales in Revlimid generic for companies such as Aurobindo, Cipla, Dr. Reddy's, Sun Pharma, according to analysts, as price pressure increases. Now, for Sun, watch for the specialty portfolio growth. That would be the key thing to watch out for. For Biocon, watch for growth in the biosimilars portfolio. Now, the range for domestic growth is wide, anywhere between 8 to even 16%, according to some analysts. Now, domestic-focused firms such as Torrent, Ipca, Alchem expected to see good growth this quarter, and watch for commentary on Torrent's acquisition of JB Chemicals. Now, most API companies are likely to see a volume uptick this time round, with an estimated 8 to 9% growth year-on-year. Expect over 15% growth in some CRDMO companies, driven by the likes of Blue Jet, Divi's, Laurus Labs, Sai Life Sciences, while Syngene and Piramal Pharma could probably see a muted quarter due to inventory destocking on key molecules. Now, moving on from pharmaceuticals to the healthcare front. On the healthcare front, expect around a 20% growth in EBITDA, driven by over around 20% growth in hospitals and around 10 to 11% growth in diagnostics as healthcare companies recover after a softer Q4. Apollo hospitals might see continued impact of international patients slowing from the likes of Bangladesh. Commentary on the recent restructuring will be watched. Expect steady margins for the likes of Dr. Lal's. Watch for recent acquisition integration for Metropolis, which has been on an inorganic drive. Now, let's leave you with the valuations. First, for the pharma stocks, as you can see, Sun Pharma ruling the roost, most expensive, along with a couple of others such as Divi's Labs. So a lot of probably the good news is factored in. For diagnostics, Dr. Lal's as well as Metropolis, FY26 PE stands at around 50 odd times. And finally, for hospitals, the likes of Apollo Hospitals and Max ruling the roost in terms of valuations.
All right. Meanwhile, thank you for that, Ekta. You've set us the stage for the pharmaceutical space. But meanwhile, just looking at Colgate right now, they've reported their numbers. The numbers should hit the wires very, very soon. On the revenue front, the company has reported 1,434 crores on a revenue plus other income basis. So net profit coming in at 321 crores, which is lower than the CNBC-TV18 poll of 353 crores. I'm just trying to look at some more numbers as well. The EBITDA has come in at 450 crores, which implies a margin of 31.5%. As against street expectations, there wasn't much, in fact, that the street was working with when it came to Colgate. We were looking at, a revenue decline of about 0.5%, 1,490 crores. Instead, the revenues declined by a lot more, 1,434 crores. And the net profit has also been below street expectations. EBITDA, we were working with a number of 495 crores. The company has reported a number of 452 crores. So on all parameters, there has been a miss on Colgate. The stock has already seen a cut of almost 40% from its highs and continues to weaken. So EBITDA at 453 crores, street was working with a number of 495 crores. The revenue of the company actually lower than street expectations. We were working with 1,490 crores. They've gone ahead and reported 1,430 crores. And as a result of which, the bottom line as well is lower. What is it that the company is saying about this? One, they're saying it was a challenging quarter, cycling double-digit growth base. They maintained their investment behind brands, which was in line with strategy. But there have been persistent headwinds from tough operating conditions on account of subdued urban demand and elevated competitive intensity. They also worked towards premiumization, which did well. That delivered strong revenue growth. But at the same time, overall weakness in consumer sentiment and competitive intensity impacting their mass products. And that's reflected in their overall numbers. Colgate down 1.5% on the back of a subdued set of numbers coming in. With that, we'll wrap up on this edition of Halftime Report. You stay tuned. Business Lunch comes up next.